Good morning. It's an honor to be the moderator today for the insurance panel. And today I wanted to introduce our insurance panelists. We're going to start with first Mark Wu. Mark Wu is an agency owner of an all-state office in San Gabriel. He has served 3 terms as affiliate chair as well as two as a vice chair over the past 2 decades at the West San Gabriel Board of Realtors. And the next one is Leticia Pullman. She's a licensed California all-state insurance agency owner and registered financial life representative. And she has been celebrating 30 years in Temple City. The next one is Lily Hall from State Farm, agent in Walnut. And Lily Hall was born in Hawaii and moved to California when she was 3 years old. And she's very involved in the community. And she is become a State Farm agent in December 1st, 2014. And the last one is Sam Ying from Farmers Insurance. Sam Ying is a Farmers Insurance agent in Alhambra. He has owned his insurance office for the last 23 years. So let's start. I'm going to ask each panelist a question, and please keep your comments in a couple minutes. So the first lucky person will be,
let's see, where's Sam? Okay, I will start with Sam. So Sam's first question is, if NHD shows the property, the first one is located in a dam, inundation area, located in a inundation area, and then the first question is, could we purchase regular insurance in this area?
Okay. The dam inundation area is actually refers to an area that may have flooding due to failure of a dam. Maybe there's a severe earthquake, and then if your houses are located in that area, you are more prone to flooding than any other areas. So the answer to that is yes. You can, of course, purchase still homeowner insurance in that area. So the answer is yes. Okay, but I think for realtors, you mostly need to disclose to the buyers that area is more prone to flooding. I think there's a California government code. I was checking on it in section 8589.4 that California law requires a seller, all the sellers, agents, to disclose to the prospective buyers that the property is located in an area of potential flooding.
Okay, thank you, Sam. So the next one is Letty Pomas. The question is, why do you need a personal umbrella policy?
If you need a personal umbrella policy, if you have assets to protect. You own a house, maybe you have units, you have a young driver, and you might have money in the bank, something that you need to protect. So an umbrella policy is called a personal umbrella policy. It's really a liability insurance over and above the primary policy, which would be your house insurance or your car insurance. So for example, if there's a car accident and your limits are very low, that's all we're gonna cover, right? Let's say $15,000, that's not enough. If you have a lot to protect, then you better bring those limits up in the bodily injury liability section of your auto insurance and talk about getting a personal umbrella. So if they go over and above that, Like in a major car accident, they'll sue you for a lot of things. They'll try to take away everything. I've seen it already. So if you have an umbrella, you'll have a lot of protection, whether it's $1 million, 2 million, 10 million, whatever you need. That is something that is almost one of those priority things you need to have as far as insurance policies.
Okay, great. So here's the question for Lily. What discounts are available for homeowner insurance?
Good morning, everyone. So some of the discounts available, depending on which insurance company, could be multi-policy discount, meaning you have your auto insurance with your homeowner, you'll get a discount. Protective device discount, like if you have sprinklers, burglary alarm, fire alarm, smoke detectors. Claims-free discount, home renovation discount. So at times if you update your electrical, your heating, plumbing systems, you'll get a discount. And new home discount, professional discount, and non-smoker discount. So it varies depending on what insurance company you're with. Thank you.
Okay. So here's the question from Mark. How do I choose an insurance agent?
You'd have to start with that first.
Okay, let's get another one.
Well, if they have gray hair, black, no, just kidding. Anyways, that's a really important question. So what differentiates an insurance agent or an agency? What differentiates even an agent within the same company? You have XYZ company and you have agent 1, agent 2. And so what you need to do is to kind of like interview them if you'd like, I think that's a very important thing. You want to first of all see if they have people skills. When you call the agency, does the agent and their people, are they able to communicate with you clearly? Are they able to listen to you? Are they just taking an order and then telling you what to do? Or are they really trying to delve into, hey, what are your needs? How can we protect you? What are you seeking out of this policy? Good customer service is super important, What kind of customer service do they have? When you call, do you always get put on hold? Or are they, is there a live body? Do you have to go through a answering service and press 1,500 numbers before you get to a party that you could speak to? Is the company rated, do they represent A-rated companies, meaning that those companies, those agencies represent companies that have claim abilities to pay, your claims. And if they're not representing companies that can pay your claims, that's something that you want to consider. Are they knowledgeable? When you throw different various questions, not the simple questions we might be handling now, but when you bring different questions up to them, are they able to assist you in trying to resolve those issues? Or do they have to, stumble down and say, let me get back to you? And then another thing is, ask for their E&O. Do they carry E&O and what limits? And this is something that I always also suggest. Ask them how many E&O claims they've had in the last year, last 5 years, last 10 years. That will show you what kind of agency it is. Do they have a good track record of not making errors? All of us make errors, but, so those are some of the things that I think you should determine before you choose an agent.
Great point. Here comes another question for Lily. How much dwelling coverage should I have on my home?
So a lot of people mistaken that if they buy a $1 million home, they need a $1 million dwelling insurance. But I always tell my customers that, we do a estimated replacement cost. Basically, if the house, knock on wood, burned down yesterday, how much would it cost to replace? So we look at the structure, the labor, the cost, if it's carpet, if it's like granite. So that's what agents do. What we do is we do a calculation of how big the place is, and if it was to, knock on wood, burn down, how much would we replace? Some people also get confused with personal property. Oh, is everything included in the dwelling? I always tell my customers, if you flip the house upside down, that's your personal property. That's not part of your dwelling coverage. Thank you.
Okay, thank you. So this question is for Letty. Okay, why do you need renter's insurance when your landlord already has fire insurance?
Okay. The landlord is worried about, oh, Why do you need renter's insurance when you have a landlord already insuring the building? Well, because the landlord's only interested in rebuilding that building, the unit you're in, the apartment, the house. They're worried about if somebody falls in that place and they sue him, so that's his concern. He's worried about if there's a fire and the tenant has to move out, that he loses rent, right? So everything's the perspective of only the landlord. You didn't hear anything that has to do with you that's renting the place or leasing a house or condo or something. The renter's insurance is dedicated for you. So you have a nice expensive purse or purses and shoes and books and computer and all those contents, all those personal belongings. If it was to burn in a fire, your landlord has nothing to do with that, okay? You need your own policy for that. If they steal it from your car, your golf clubs or something, or if they steal it from you, they took your purse with all the money in there and some jewelry, et cetera, and a nice purse too. So, so you need renter's insurance to cover your belongings. And like she said, if you turn the house upside down, whatever falls out is yours, right? That's your personal belongings. It has nothing to do with him. The other thing is, what if you have a cute little small dog, later grows up a little bit, and somebody came over to visit you and tripped with that little dog or got scratched with your cat or something? That's called liability. So they're going to sue you, not the landlord necessarily. They'll probably go after him too for letting you have it. But anyway, you should have a liability insurance for things like that if they sue you. And of course, again, loss of rents on his side, but loss of use of that place on your side. So if there's a fire and you can't live there for a little bit, the insurance company will help you to be in a hotel for a little bit. So that's called loss of use. Thank you.
Thank you. This question is for Sam. If NHD shows the properties either in a dam inundation area or geologic
You
hazard
asked
zone.
that one, I think.
Huh?
You asked that one?
Well, he has 3 questions based on that scenario. Based on that scenario, yes.
Sam's doing all the national disasters.
Yes,
I got
he's
all
going to
the
cover that area.
difficult questions here. Not easy to answer.
So the question is, do we need to purchase additional insurance to protect the homeowners?
Yes. If the houses are located in an area that is from the NHD, Natural Hazard Disclosure Report, besides the homeowner insurance or the fire insurance that you need to buy because of that special hazard area, there are additional insurance that you should get for the house. Like, okay, if it's in the dam inundation area, I will pretty much suggest you to buy the flood insurance for flooding. And then if it's in the seismic area, you pretty much need to buy an additional earthquake insurance to protect your assets, your house. And I guess anywhere it would be ranging from at least $2,000 to $3,000 altogether with your homeowner, flooding and earthquake insurance. Depends on how big the house is.
Okay. Thank you, Sam. So for Mark, what does extended limits mean and how does that apply to a proposal that I'm reviewing?
Okay, David, you're up. I have a slide for that. Next one, please. So Lily talked about replacement costs. Just each company has basically a formula that they determine what it's going to cost to rebuild a particular house. But this is just an estimate, all right? And this is super, super important because the problem is that they're not having each contractor come and determine how much that cost is going to, the house is going to be built. Because in order to get a true figure, you have to have the architect, the plumber, the electrician, the framer, the concrete guy, and any tradesman that works on the house give a bid. Naturally, you're not going to get these contractors to give you that. So companies have their particular formula. So actually, it's up to the clients, the insured, to determine if what the agent presents is enough to rebuild. So what companies have done is that they've put, and this Department of Insurance made sure that companies disclose that, is that they came up with something called extended limits that each company has. So what that means is that an insurance company will give you what they will think that they're gonna replace the house with, and then each company puts a percentage above that cost in the event that they are off in their estimates, there's some padding so that we can ensure that the house is rebuilt. So in this simple example, if you have company A, B, C, and D, and you guys get a quote, and if you don't know what you're looking at, and you're looking at the dollar amounts, you know, and I do this training all the time, oftentimes you might go to that figure and you go, man, you know what? They're all giving 500,000, so let's go with company D because they're the cheapest. And that's the natural tendency of human nature. The unfortunate thing is that each of these companies give what we call a different extension. So you see in company A, they give actually a 50% extension. What does that mean? That they'll take the amount covered times 1.5. In this case, it will be 750,000. Company B would do 25%, company C would be 20%, and company D is a specified limit policy, meaning what you see is what you get. How does that affect your insured? Well, if you had your house totally burned down and we had put 500,000 on it, and now it costs 675,000 to rebuild, if you look at the below, zero out of pockets for company A because it picked it up, even though it was above that 500,000, because that company covered up to 750,000. If you went all the way to company D, you'd have to pull out the 175,000 out of your pocket because they're a specified limit policy. So again, make sure you understand that. You don't have to know these numbers. The simple question you do, call the agent that's giving you a quote and say, I know I see this amount, but what's the maximum you will pay in the event of a total loss? That simple question will give you that bottom line, and then you'll know that definitely your clients can have their houses rebuilt.
Thank you, Mark.
You're welcome, man.
Okay, for Lily, what is the loss of use coverage?
Just to add on to Leticia's renter's insurance, loss of use is basically if you cannot live in your apartment or your home, if you have a renter's or a homeowner, you basically get a living expense to pay for groceries, food, or hotel while the place is being repaired. So if it really depends on the insurance company. Some gives a set amount like 50,000, some gives up to like a year, some gives up to 2 years. It has to be a reasonable time of repair in order for them to pay the expenses for the food and the hotel. Thank you.
Thank you, Lily. Here's for Letty. What is the difference between condo owners HO6 and HOA master policy, homeowners association insurance?
All right. An HOA is a homeowner association, and they are obligated by the CCNRs or the bylaws to have a master policy insurance. What does it cover? It covers the fire insurance if the buildings come down. It will cover signs. It would cover maybe they have a rec room. All of that has to be analyzed and figured out by the agent how much insurance they need for the dwellings, let's call it. Or sometimes they call them improvements if you have CCNRs. Also, they need to cover in that master policy the common area. Not the backyard, for example, of your own condo, but the area that everybody travels through. So if somebody got hurt in that common area, they're going to sue the insurance company of the master policy insurance, and the money will come out of there, okay? They can get a liability of, let's say, $1 million or $2 million or more, whatever it is. Sometimes it even says, and most of the time it does say right there in the CCNRs, how much they need to get. The board of directors as well, the president, secretary, treasurer, they need to have insurance, and that will also be named there. It's called directors and officers insurance in case they make a mistake, like an E&O kind of insurance, and that will be incorporated in the policy as well. There's something also called fidelity bond or employee dishonesty, or sometimes they call it just crime, and that is if somebody in that board took some money that they shouldn't have, because they're continually asking for the HOA fees. So somebody's holding the money, And if one of them takes it, which is a crime and needs to be reported and so forth, but the money will be covered under that master policy. The HO6 or condominium owner's policy is different though. That one is the individual owner, whether he lives in it, it's a secondary home, he's renting it out, no matter if he paid it in full or not, and nobody's obligating you to get it, you should have a policy called an HO6 or condo policy. Why? Because the bylaws might say you're responsible for the interior wall coverage, so that's gonna be out of your pocket if there's a fire. Let's say that you are the condo owner and you live there, where you're gonna have all these contents, your personal belongings are in there as well, so you need to cover that as well. Just like we talked about renters, well, this one's a condo or a homeowner's, any of that, this is your home, you need to cover your personal belongings in case of a fire, case of vandalism, and the HOA is not gonna cover any of that. Liability, what if you're having your own little gathering and you're the one that's getting sued? It has nothing to do with a master policy. You need to cover yourself with your own liability insurance. That's why you need a condo owner's policy. And of course, you can insure extra your jewelry and other things of higher value, fine arts and so forth. The other thing that's really important is something called loss assessment, because sometimes the common area will get sued for something. Let's say somebody got hurt in the pool, if there's a pool or something. And so let's say the master policy had $1 million of coverage, but the incident was so serious that it went over that 1 million mark of coverage. Well, they're gonna assess for that loss to all the owners, all of them, if there's 100 or if there's 10 or how many unit owners or buildings there are, okay? So they will assess. So your condominium owner's HO6 policy, that's not even expensive at all, will cover you up to certain limits, you have to discuss that, for your loss assessment. And again, loss of use is covered as well in a condo owner's policy. So a lot of good stuff. Thank you.
Thank you. So Mark, what perils are not normally part of a home insurance and condo HO6 policy?
Okay, David, do you have that next slide up? So normally your policies cover these perils right here, all right? So whether you have a condo or you have a homeowners, you're most likely gonna get that. So what are things that are not covered on your normal homeowner policy where you have to buy extra coverages for somebody else? First of all, earthquake. We talked about earthquake insurance. So if your house is or your condo is damaged due to earth movement, you're not going to have any coverage. So you have to buy a separate policy on that. And then the next one is flooding. Now this is surface water. Hits the ground, comes back into the house, causes flooding. You're going to have zero coverage from any normal condo or homeowner policy. And that includes mudslides, what you've been seeing in the city of Duarte recently. The other thing that's not normally covered is a vermin infestation. So you have a bunch of rats, mice, squirrels, all right, that's in your house causing damage. Those are not going to be covered. Those are all excluded, as well as insects where you have termite damage, right? Your termites are damaging your house. You can't call your insurance company and say, hey, you know what, I just found a bunch of termite damage, and so I need coverage for that. And then the last thing is the wear and tear. You know, when something goes wrong, there's a mechanical defect on your appliances, your built-in appliances or your AC or whatnot. That's what home warranty is up for, all about. So these are the items that are not covered, and those are the items that are generally covered on a condo and a homeowner policy.
Thank you, Mark. Here comes the last question. Sam, so under the same scenario, if NHD shows the property located in a dam inundation area or geologic hazard zone, the question is, what do we say to the buyers when their NHD report has any or all of these?
I guess we have to be very honest with the buyers, telling them all these facts that you have. I guess if you were contacted by a potential seller that want you to list a house in that area, I guess you pretty much, for me, if I usually put myself into their shoes and see what they will tell me. And if you don't do that, I guess eventually it will come back to you. And just be honest, tell them, maybe sometimes you lose the deal, I guess, you know.
Thank you, Sam. Okay, do you wanna-
I just had a follow-up just because of something that just happened actually yesterday. So I was at the Arcadia Board of Realtor and an agent came to me and said, you know what, my house is in this area and it was in a high fire zone and my buyer was told by his agent that he couldn't get insurance. So one of the things I say, first of all, is, you know what, I like to recommend that let's take the liability off you guys. Get somebody on your team, a respected insurance agent. Have that person answer any questions in regards to what is required and what's not. All right? You guys are not insurance professionals, so you can say what we say because you're just giving general knowledge. But why not have somebody that can articulate the answers of what your clients need to do and absorb the liability? So in this instance with this person that came up to me, and she was just here and she left, but we were able to present something because sometimes I'm not even going to be able to do it because the companies I represent say it's in this area and we're not going to take it. But then one of their companies might think otherwise because they haven't had losses. So always check when you're giving it a no the first time and go down the line, and that way, you know, we don't go based on just disclosures. That's not what, all companies have their own risk tolerance of where they want to be. So if you get a no first, go to the second one.
Okay, well, I guess when you get a rejection, no always means next opportunity. So now we're gonna open it through a Q&A session. So if anyone has a questions, we have the best experts today. Okay, Sylvia, please.
Let's see what it's.
Do we need to give
I live in a townhouse, and I just recently got a notification from my insurance, because it's coming up for renewal in March.
When's it?
Call me up, please.
Seasoned agents.
Questionnaire, I guess they're, all the insurance companies probably are updating. They ask me if I have a fire hydrant in the house, if I have extinguishers, sorry. If I have sprinkler systems in the townhouse, if I have a deadbolt security and all this and that, and then they ask me, can I answer yes or no, and then my husband and I start thinking, do we need this, do we need that? And then, when we call them, they say, is it an, studs in, studs up? What do we know about that? Well, I guess, studs in, when we live in a townhouse, they said, is when they cover if we get into a fire situation or a flood situation, they replace the house itself, and they ask, they get more internal in that. Are all insurance companies asking all these new questions, or are there a lot of fires, and that's why they're coming out with all these new statistics, or what's going on?
Well, part of that might be a policy review where they're trying to get you a discount. You know, do you have a fire extinguisher and deadbolts on the door? That's a discount, like she was referring to.
It is.
As far as the studs in and all that, that's part of your bylaws and CCNRs, whatever it says there that the insurance company has to follow as far as coverage is concerned.
Wait. Okay. Okay.
I have a comment.
Okay, Bob.
Wait.
Wait,
Let me
let's
answer her
finish
so
that
because I can only
question first.
concentrate on one question at a time. What they may be trying to determine is to determine what dwelling amount they have to put on your condo, because as Liddy talked about, there's a difference between a master policy and a HO6 policy. A HO6 policy covers the interior dwelling that you are responsible for, defined by the CCNR, non-common area. Now, all CCNRs aren't the same, so when they're saying stud in, stud out, what they're referencing is, hey, are you responsible for this wall, or is it common? But, and really, you're supposed to know that, because we're not gonna, you know, I know from our company, we're not allowed to really read through the CCNRs and advise because we aren't attorneys, and we don't want that liability. But we can guess as much as how much we need to put in it. So they're probably, I'm surprised they're doing it on the back end. They should have done it on the front end, most of these things. But also, as Letty alluded to, maybe if the agent's asking some of those questions, then they're trying to find additional discounts fund. But if it's a main thing where you're getting a bunch of questions, they're probably doing a whole underwriting review of that, and you have been selected to do that.
Okay.
How many people live in the house? Do you have service people? Do you live with the home? Do you have a janitor or a maid that comes in? So I guess if they get
Yeah, a lot of underwriting in there. You need to review that with your agent.
Right. It is a review. Your fire extinguisher and your deadbolt actually will qualify you for discounts for most of the companies. And I guess usually for this, I guess you may have your policy for a while. Your agent should usually maybe review your policy maybe like 2 years or so, just like a physical checkup to just keep it updated. Okay.
Okay. That's a great question, Sylvia. Okay. Bob.
Between an admitted carrier and a non-admitted carrier, and how difficult is it collecting money from that non-admitted carrier?
Handle that one?
You want me to?
Well, let me answer some here. Admitted carrier are carriers that they are admitted into California to write business in California, and they are protected by the California insurance law here. Somewhat like the when we deposit into the bank, like $100,000 is, I guess, is your protection, your limit. Same thing for the California admitted company. If you insure with them and the company go belly up, the California insurance guarantee, there's a board like that. Someone will help me on that. They will pick up the policy and will pay the claims from the insurance carrier. Now, non-admitted companies are those companies that they are not admitted into California here to do business. However, you can still do it with them, but they have a disclosure in there and telling you that if you were to have a policy with them, and if the company goes down under, they may not be able to pay the claim on that. Okay, I mean, it's a disclosure for that. Sometimes I look at it, there's other admitted companies that they will write risks that the preferred company that they don't write. You may have to go to them, and some of them, they are very big too, okay. Mark, you folks may want to.
They're throwing it back to me. Okay, so basically, an admitted carrier, there's rating agencies out there, and it's the financial ability for those companies to pay a claim. So you can have XY's 100 admitted carriers, and some are going to be A-rated, and some are going to be B-rated, and some so that tells the rating. Just like if you guys are involved with stock markets, there's rating of bonds and stocks and whatnot. So that will show how strong a company is. For instance, I know we only represent A-rated companies because that's what our companies will allow us to do. Once they get down-rated, we can no longer write with that because we want to make sure we have the strongest companies that are available to our clients. However, what happens is there are some areas where insurability, like Sam alluded to, that the companies just don't want to insure there. Then you have no choice but to go to an unadmitted carrier, meaning that they haven't fulfilled all the necessary financial obligations and fees and whatnot that the Department of Insurance in California requires them to do. But that doesn't mean that they're a bad company. Some are fly-by-nights. A lot of these auto risk companies that say $15 a month, for your auto insurance and all that, you're basically just getting a piece of paper and they're in some island someplace and you're not going to get paid. Though that's one sense. Then you have another one. There's a company that's super big and they're unadmitted, but a lot of times agents have to that's their only recourse to cover your risks and then you can see what their financial ability is, and you can also see, assets to liabilities versus claim-paying abilities. And so, although they aren't given a rating as an admitted carrier, you can see whether or not they're fiscally strong. Susie, did you have a question back there?
I have a neighbor who had purchased their home like 3 years later, had to knock it down because of spraying termites. The whole house had to be knocked down. You're saying it wasn't insured, and I heard it was
the fire insurance?
Not that I'm sure none of their policies cover it. They probably said it was covered for something else. You may not have gotten the whole story. I understand that, but I'll guarantee you that that didn't happen. If it did, you guys all have to get policies with that company.
All right.
There's, right? I mean, you guys confirm it.
Yeah,
Would
we
you
don't
guys
cover
cover termite damage in
No.
the house?
It is most likely the claim will be based on other perils which has been covered.
And termite was part of it, but that
Right.
wasn't the main peril.
Maybe water damage or whatever.
water damage.
Yeah.
That's what I'm hearing.
Yeah, the pipes bursted, and so the house was declared a total loss, and then termites came in. That would cover it.
Accidental though, right?
Right,
Yeah.
Incidental.
Don't do that on
Accidental.
purpose.
Okay. Oh, okay. We are running out of time, and thank you so much for the title panelists today for all your participation. We truly appreciate it.